Something broke in the precious metals market yesterday that perfectly captures 2026's economic insanity. Gold got absolutely crushed down to $4,701 per ounce after hitting $5,626 just last week. That's a 16% plunge from peak, while the S&P cratered 4.2%. VIX spiked to 32, and 10-year treasuries hit 4.87% highest since 2007. Silver, different story. Holding rock solid at $79.13, refusing to crack $75 support despite falling 33% from its $121 high. Why the massive divergence? Because Trump's 25% tariffs on Mexico and Canada, plus 10% on China, just lit the fuse on a supply chain disaster, and silver's industrial demand creates a floor that gold's paper safe haven flows can never match. Let me connect the dots nobody else is talking about. Walmart just issued a terrifying warning. Empty grocery shelves by March 15th. Avocados jumping 64% to $8 each by Easter. Ground beef hitting $12 per pound. These aren't random price spikes. They're the first tremors of Trump's tariff tsunami hitting North American supply chains. Mexico's auto exports, down 22% projected. Canada's steel industry. 180,000 manufacturing jobs vaporized. And buried in that chaos is a silver supply shock nobody saw coming. Here's why silver refuses to die while gold bleeds. Silver isn't just a hedge, it's an industrial necessity. Solar panels burn through 200 million ounces annually. EV batteries need 2 to 3 ounces per kilowatt-hour for high-voltage, busbars, and conductive paste. Electronics, 5G infrastructure, AI chips all require silver wiring that copper can't replace. Factories don't care if COMEX spot price dips to $70. They need physical bars delivered today or production lines freeze. That's your industrial floor. Contrast gold, 95% investment demand. When the dollar rips 3.8% against all currencies as a safe haven, gold specs get margin called. ETFs dump. Central banks pause buying. No factory in Ohio stops welding because gold dipped $100. Silver? Different math entirely. Now, layer on the COMEX crisis. Those vaults we talked about. Down to 415 million ounces total inventory after losing 34 million in January alone. Registered deliverable stocks collapsed 26% in 7 days. Paper claims still tower at 528 million ounces exposure. That's 5.621 leverage. China banned exports January 1st. Factories raided what's left. Physical premiums already exploding. Spot $79. 1 kilo bars trading $110 delivered. Dealers posting signs 4 to 6 weeks backorder. Trump's tariffs amplified this perfectly. Mexico ranks third globally in silver production. That 25% tariff kills their exports to the U.S. So local auto plants and solar manufacturers grab every bar they can before borders slam shut. Canada's tech resources divert silver output domestic. Chinese retaliation blocks silver scrap recycling flows. U.S. factories suddenly compete with hoarders for the same finite pool. Spot price becomes irrelevant to allocation rules. Gold faces no such dynamic. Infinite COMEX supply illusion. No solar panel welds without silver plating. No Cybertruck battery interconnects without silver paste. That's your divergence explained. Watch the signals screaming panic. Hecla Mining up 18% after ours pure domestic U.S. silver exposure wins tariff wars. Tesla reportedly bidding $95 internal for Gigafactory silver, while spot lags at $79. Walmart's SMT shelf warning confirms supply chain fracture. Pakistan's silver at 9,006 rupees per tola, 30% monthly gain, despite global chaos because physical premiums rule locally. Timeline locks in now. February sees silver physical trading $85 while spot lags at $72. March hits $95, normalized as factories ration harder. Second quarter, $110, when COMEX delivery notices overwhelm remaining vault stocks. Gold tests $4,200 if Fed Chair Warsh signals March hikes. Dollar strength crushes paper positions while physical silver decouples permanently. Your exact playbook while chaos accelerates. Physical silver only no ETFs, no futures, no counterparty roulette when COMEX cracks. American Silver Eagles, Canadian Maple Leafs, generic 1-ounce rounds. Home safe plus allocated vault combo. 5 to 10% portfolio maximum scale ruthlessly on dips, below $75 spot when physical stays $95 premium. U.S. silver miners become tariff winners. Hecla Mining, core mining domestic supply, suddenly priceless. Streamers like Wheaton remain immune. Watch silver to gold ratio. Buy silver aggressively when it hits 95-1. Gold emergency hedge below $4,500 only. Grocery positioning matters too. Beef, dairy, Mexican-produced stock 3 months before tariff math hits dinner tables. Walmart won't save you. Pakistan viewers, 12,000 rupees per tola physical, disconnect coming fast. Local premiums already massive, stack before dealers ration completely. This isn't trade war volatility. It's industrial supply chain collapse meeting COMEX physical shortage at the worst possible moment. Gold bleeds because it's a sentiment trade crushed by dollars. Silver holds because solar panel factories and EV battery plants need metal yesterday, regardless of tariff headlines. Trump's tariffs killed grocery budgets. China's export ban killed COMEX vaults. Dollar strength killed gold specs. Physical silver stackers. They LL eat steak while ETF holders eat instant noodles and explain to their kids why avocados cost $8 each. Welcome to 2026 economic warfare. Your metals positioning determines which side of the dinner table you sit on. Physical ounces in hand beat paper promises every time. The math doesn't negotiate tariffs plus Iran war. Silver breaks $85 as gold bleeds physical premiums explode. Trump's 25%. Mexico, Canada. Tariffs collided with Iran nuclear brinkmanship yesterday, creating the perfect storm for precious metals chaos. Gold crashed through $4,650 support after hitting $5,626 highs. Silver exploded past $85 resistance. Physical bars now $115 delivered, while COMEX spot lags at $82. Walmart warns empty shelves. March 15th. Tesla bids $105 internal silver for gigafactories. This is supply chain collapse, meeting physical shortage. Your exact positioning determines if you eat steak or ramen when grocery prices spike 32%. The math is brutal and simple. Trump's tariffs don't just raise avocado prices 64% and beef 32%. They fracture North America's silver supply chain at the worst possible moment. Mexico, world's #3 silver producer, diverts 200 million ounces domestic as auto exports collapse 22%. Canada's steel tariffs kill silver byproduct flows. China's export ban already drained COMEX vaults 34 million ounces. Now Iran's Strait of Hormuz threats add 15% risk premium to industrial metals. Factories don't wait for spot price recovery, they grab physical allocation now. Gold dies for 3 reasons. First, dollar index ripped 4.1% as safe haven crushing 95% investment-only demand. Second, Fed Warsh signaling March hikes kills inflation hedge narrative. Third, COMEX gold vaults face no physical squeeze, infinite paper supply illusion holds. Silver faces opposite reality. Solar panels burn 220 million ounces annually. EV batteries need 2 to 3 ounces per kWh for bus bars nobody can substitute. Tesla alone demands 55 million ounces yearly. These factories run just-time no 3-month stockpiles. Silver halt equals assembly line freeze within 45 days. That's your industrial floor paper gold completely lax. Current panic signals confirm breakdown. Hecla Mining plus 22% after-hours pure domestic silver exposure wins tariff wars. A PMEX post sold out on 1 kilo bars. Spot $82, delivered $115. Pakistan silver, 9,400 rupees. Tola physical premiums, massive. COMEX registered stocks 92 million ounces versus 535 million paper. 5.821 leverage. Delivery notices spike 72 million ounces February projections. Physical premium disconnect accelerates. Spot $82 today becomes irrelevant when factories bid $105 internal. March hits $95 spot versus $125 physical standard. Q2 delivery halt pushes $115 spot matching physical reality. Gold tests $4,200 if dollar holds 105. Your exact execution while chaos compounds. Physical silver priority 1 American Silver Eagles, 1 S rounds, Canadian Maples. No ETFs pure COMEX counterparty roulette. Home safe plus allocated vault. 7% portfolio maximum. Scale dips ruthlessly below $80 spot when physical stays $110 premium. U.S. silver miners become tariff superstars. Hecla Mining, domestic juniors with cash flow. Streamers Wheaton, Franco immune to supply chaos. Silver to gold ratio hits 96:1 by silver aggressively. Gold emergency allocation below $4,400 only. Grocery war preparation critical. Beef, dairy, Mexican produced 3-month supply before plus 35% tariff math hits. Walmart cannot restock what Mexico won't ship. Pakistan viewers, RS 13,000, Tola physical disconnect locked by Ramadan. Stack before local dealers ration completely. 3 forces collided, simultaneously tariff supply chain fracture. COMEX physical shortage, Iran war premium. Gold bleeds because its paper sentiment crushed by dollars. Silver explodes because solar factories and EV battery plants need metal today regardless of headlines. This isn't volatility, it's industrial allocation war. Physical stackers secure production inputs. Paper holders watch spot charts while factories pay whatever necessary. Trump killed grocery budgets. China killed COMEX vaults. Iran killed risk-free industrial supply. Your positioning determines dinner table reality. Physical silver ounces in hand beat ETF screenshots when factories bid triple spot premiums. The math doesn't care about your timeline. Stack accordingly before March empty shelf warnings become reality.